Hi, everybody. Welcome to the May 2026 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. While March served as a reminder that unforeseen risks can cause short-term sell-offs, April showed just how quickly things can change for investors. While geopolitical risks certainly continued to be felt in April, investor focus shifted throughout the course of the month towards improving fundamentals and impressive earnings growth, leading to a sharp rebound for stocks. The S&P 500, Dow, and Nasdaq all surged in April, driven by notable earnings growth and a risk-on sentiment for investors. We are now over 60% of the way through first quarter earnings season, and so far, the updates from corporate America have been great. Earnings growth for the S&P 500 is averaging over 25%. That is a stunning number and considerably higher than the already impressive 13.2% earnings growth rate expected by analysts at the end of the first quarter. Over the long run, fundamentals drive performance, so the better-than-expected earnings growth to start the year is a good sign for investors. Encouragingly, growth has been widespread as 9 of the 11 sectors currently have reported earnings growth. This is a shift from the technology-heavy growth that we saw in recent years and indicates that broad sectors of the economy are doing relatively well. As a result, full-year 2026 earnings estimates have now risen 5.6% since just before the war started. Even bonds were up slightly in April, despite rising long-term interest rates. The Federal Reserve met toward the end of the month and elected to keep short-term rates unchanged, which was widely expected by investors and economists. The economic updates released last month were largely positive and showed a resilient and growing economy. The initial estimate of first quarter GDP growth came in at 2% annualized, which was up from the 0.5% growth rate at the end of the year. The economy also added a solid 178,000 jobs in March, which was the best month for hiring in over a year. On the consumer front, we saw signs of stabilizing sentiment and still solid spending growth. Personal spending rose by the fastest rate in over a year in March, following a solid February. It's encouraging to see that consumers remain willing and able to keep spending despite the ongoing geopolitical risks. This will be a key area to monitor given the importance of consumer spending on overall economic growth. While the April updates were largely encouraging, it's important to remember that markets still face a variety of real risks. The most pressing concern remains the ongoing conflict in the Middle East and the resultant surge in oil prices. Without a resolution to reopen the Strait of Hormuz, concerns about the impact on the global economy will remain high. We also face elevated levels of policy and political uncertainty here in the U.S., with the transition to Kevin Warsh as chair of the Federal Reserve and the approaching midterm elections in November. Overall, however, we remain in a pretty good spot when looking at the economic backdrop and corporate fundamentals, both of which should be supportive of markets. While short-term volatility is certainly possible given the heightened level of uncertainty, the most likely path forward is for continued economic growth, strong corporate earnings, and market appreciation over the long term. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.